Well, good weekend, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is your weekly edition, where we'll go into our weekly charts for this Friday, the 10th of May. And whoa, what a crazy times it has been. You know, the one thing we've seen is vertical moves happening all over the place, be they up or down. Now, the markets this coming week have one big piece of news. It's Tuesday and Wednesday. PPI and CPI numbers. And I think you have to approach it in this way. If the numbers are weaker than the analyst forecasts, the market will get most likely what? A bid into the stock indices, probably going for new highs. If the numbers come out over them, it means the Fed stays what? Higher for longer. It fights that whole mantra that we're trying to get through. Are they going to cut interest rates? And what next happens then? Well, then you probably come back down in these markets. The one thing we will know is what to do, or have a pretty good idea of it, come Wednesday morning when this comes to an end and we get those numbers. That's how I think you approach the markets. You know that you'll wake up and each day you're going to hear more bad things about what Israel and Hamas are doing. The U.S. has abandoned Israel in terms only, as I see it, of offensive weapons, but I could be wrong on that. But certainly there's a cold shoulder between the U.S. and Israel, and that's been that way since actually Biden took office, and it's been pretty much that way, and it just keeps getting worse. I'm not saying Netanyahu's got to be an easy character to get along with, believe me on that. When we look at everything else that we've got, I think that's where the markets are going to center. So as we look at this, let's take a look at what the charts look like. We'll start off with a monthly chart. You're up 3.5%. The old high on a closing basis, and that's all I'm looking at, was 53.08.5. When you come back here, this is the weekly chart of closes. You can see it. So you know what the goal is. That's the numbers that the markets are going to go for if they get bull news. Bear news, you get down under these lows that you made back here, and that will activate the sell may go away. I'm not saying I know which one's going to happen. That's what we're doing this for. When we look at the weekly chart, you can see that you've had a reaction, and now over the past month, remember this is a weekly chart, so over the past month, after you made this low, you've spent 3 weeks climbing to see if you can regain those highs or not. If it fails, traders will call it a double top. If it doesn't fail, this was a correction and the market's still going. The difficulty, and I'm going to explain it, has been you broke this pattern of higher lows and higher highs. You did it in grand fashion over a 3-week period. Now you've climbed back at this point. The market went to and fought a battle at the 18-week average of closes in red. This is the 100, the 200 week. So you know what you've got right there. Next, when you look at the markets, you can see that the Bollinger Band comes in against the 53.67 level, but that is over the weekly all-time high on the spike high. So you got to pay attention to this, because even if you got some resistance there. A lot of traders have already upped their yearly goal to what number? 5,400. But you're back to the 5,200 level that was the original goal of many, and they upped it again, and now we'll see if the market helps them. In terms of momentum, you had lost your bullish embedded reading. Now, if you haven't taken my course, it'd be a great time for you to spend part of this summer doing that. Because when this event occurs, and I'm only going to show it once, and you lose the embedded reading, in this particular case, you went right to that number and you held it. It's the closest moving average when you lose an embedded reading that it often goes to. Look at how the market fought there, and now it's trying to come back up. Your fear should be, in my opinion, if you get back underneath 49.63. That could be the problem for the market. Gets underneath that, you open the door to lower prices for whatever reason. I don't know what that reason would be. When you look at the Dow, Your all-time high is right here. Now, I heard an interesting statement, or I think I read it, and it was brilliant. It was this morning, and I think it was an opinion article in the Wall Street Journal explaining the difference between the Dow and the S&P, and it's really quite good. We know that on the surface, one's 30 stocks and the other's 500, right? But it's more than that. This is the old guard. And what do they include in it? Their big tech name is Intel, if you think about the chip maker. What's made everything run in the S&P? AI and NVIDIA. And don't get me wrong, there's Meta, there's Google, I know that. But I'm just pointing out to you, that is a substantial difference. So to get 7 or 8 days in a row up in the Dow when it was lagging the S&P and playing a catch-up game is not unusual. I didn't realize that. And don't get me wrong, 8 days up in a row is always unusual. But it's interesting. And this is the best string of daily gains the Dow has put through. But like we're talking, in this market, unlike the S&P, you have an uptrend. Higher lows, higher highs, an easier target, the 40,054 level. I think the pros are going to buy pullbacks to 38,817 with stops under this low right here of 38,666. Gets underneath it. That's a problem for the market. In the NASDAQ, different game. There's so many different games at work here. This has a bearish pattern, lower highs, lower lows. You literally have to get back over right here, that high, in order to say, okay, we have a chart that negated the bear trend. It can't begin a bull trend right now. We'll know during the week what it does, obviously. After Tuesday and Wednesday, you'll have a pretty good inkling where you're at. But that is the number you have to get over to neutralize the market. But it would not give you a pattern of higher lows and higher highs. Got it? So now the key is, do you break under 17,916 and turn the market back to the downside? On May 22nd, the big boy reports. That's NVIDIA. We're coming to the end of a lot of names now reporting in the S&P 500 as well. When you come to the Russell, you got a whole different game. You've gone from the upper Bollinger Band to the lower band and just backed up here. So this market is just sort of going sideways. Momentum-wise, you hit all your targets on the downside, the upside, you got back to the 18, and you're flat in momentum. So you got almost 4 different games going in the stock indices all at one time, but they're all going to be initially dependent on what CPI numbers look like on Tuesday and Wednesday, PPI, CPI. 5-year notes are still in the bear camp. Yes, you're trying to get a rally in the market a little bit here, but I don't think you're going anywhere just yet. In the 10-year note, lower highs, lower lows, and you can see how the market is fighting its battle. So we're still very much in the bearish camp as we're sitting here in these two markets. When I come to the dollar index, it's a higher high and a lower low, and you can see how the market is just sort of drifting around right here. But you still have a bullish embedded reading. And that's when these two numbers, or do you? Or do you? You got a 78 reading. What does that tell you in the dollar index? If you had an embedded situation, let's go back. One more. Both numbers over 80. Both over 80. Both over 80. I think you'd agree with that. Not there. You had 3 in a row. And then this week, you lose it. One of two things happens. If you don't regain it right away, the odds strongly favor, I don't know other word that I can give you on this, that the market's going to make a run to the first moving average, which it's right here. It hasn't done it this week, but it's 104.67.5. And it also says that if you take out the high of last week, since that's the most recent high, you have more upside left in the market. Now, that upside is interesting because 106.22 is the upper Bollinger Band. You're in a tricky spot in this market. In the eurocurrency, the trend is down. You had been oversold. You've corrected that. Neither number is any longer under the 30 level. It's going to react, I promise you, to how the CPI goes for one reason. 57.5%, 58% of the dollar index is made up of the euro currency. So whatever's going to happen, it's going to impact this head on. In the Canadian dollar, on the weekly chart, you still have a bear play at work. Now, admittedly, you've gotten down to the area, you haven't quite hit it, of the Bollinger Band in the past 3 weeks. You hit it back here, way back, but you're still very much in the bear camp. To negate that, you got to take the market over the most recent high, which was last week's high, and that number was, what was the high that we're going there? The high was 73.53.5. So that would be the number that you got to take out. And if you do that, you break the bear trend, and your first objective would be the 73.80 level. In the Japanese yen, I think the pros are going to keep pressing and selling the yen. I don't think they're anywhere near through. I think they're going to test the bank again, probably, that's what I think, at the 160 level. In order for this all to stop, what really has to happen is somewhere along the line, I don't know where that is, the bank has to change its monetary policy. Hasn't quite done that. In Bitcoin, lower highs, lower lows. You're coming back up now. Down is the right word, coming back down to challenge the 18-week average. You can see how momentum is turned down. I think you're going to fight a battle at the 58,000 level for a while. For the first time in a bit here, you got to close where you're underneath the 18-week average of closes. So Brent now is not favored over WTI. It's falling faster. And look how the markets came down. Now, we did get a rally yesterday when the news came out that Israel was encircling Hamas and going to go for the attack and, the big fight that the U.S. is having with them. But it doesn't matter. If you looked at any satellite images today, and I do, they've really cut off Rafah in half at this point. And their next step, they're probably in the tunnels. They probably know where they're at. They're probably there already. Over 100,000 people now, according to the United States, have left the zone where the leaflets were done. So this is going to be very surgical, but it's going to include, again, air, bombs, soldiers, whatever they have to do. This is the wipeout period that could be stopped if Hamas would come to the table and agree to the terms of Israel. Israel isn't going to agree the other way. When you've got all your army around the enemy doesn't dictate the terms. You try to be reasonable, and whatever that means, but they have been all the way through Hamas from everything I'm reading in all the newspapers, including Arab newspapers that are translated to English with their slant and Western papers with their slant. The simple fact is Israel can't let Hamas survive the way it is. It can let them go, but it can't let them stay there. That could be a compromise. I don't think Hamas wants to do that. They'd rather die. There's a better place up in heaven. Higher highs, lower lows. You can see you're under the 18-week average. So you're slipped back and you're void of a trend in this market. Gasoline, I've been warning you, don't be a buyer yet. Now, we're reaching a peak driving time, the first one, which is going to be May 31st. So you watch that holiday. If you're going to hold, this is the zone you're going to do it from. You've hit all the downside targets from losing the embedded reading. So you put it together, you come up with game plans. I'm there for you on this. Let me tell you what I try to do in both the futures, the spiders, and the ETFs. At 6 in the morning, Monday through Friday, I start recording daily futures. Now, they'll look this way, the charts. And by the way, the ETFs will look this way. They'll have the black backgrounds, more studies than you see here. And I'm able to say, I want you to buy here. I want you to sell there. This is where the stop is. This is where I want you to go. Peel off trades this way, so on and so forth. I start off with the morning fundamentals. It will look like this on our website, by the way. In the member login area, you'll see the morning video. It'll tell you the date and the time I posted it. The same with the ETF. Then at 9 o'clock, I begin recording the ETF. I let the first half hour go by design in the ETFs. I want the market to get the final U.S. economic reports, which are typically coming up between 7:30 and 9 a.m. And then I want to give you the analysis after the money has hit the market, because, you know, there's aftermarket trading and it all comes home to roost, first half hour of trade. So how do you get to this? Just go to iraepstein.com under research. You'll see a pull down in our menu now. It's right there. Just give it a click and you're in where you have to be. You can also move up here and it'll take you right to the combo area. We just fixed that up on the charts today. In the meantime, I'm Ira. You have yourself a great weekend. Enjoy the beautiful weather. And I'll pick up with you in the next videos that I do over the weekend here. And of course, Monday morning. Take care.